All right, hello, this is Mike again with NetPicks.com and the Options Mastery Program. So I thought it'd be helpful if I recorded a quick midweek update video just to walk you through some of the things that we talked about over the weekend and earlier in the week. Take a look at some of the key levels that we've been reviewing and that we've been looking at. Another interesting market here so far this week. We've closed out of a number of winners. We'll take a look at a handful of those here today, and then I'll do a more comprehensive recap over the weekend. But I know I say it a lot, but it's an interesting market. This market never disappoints these days. Let's put it that way. Just a lot of interesting price action back and forth. It's still very much a day trader's market. It's very difficult to get follow through for any length of time. It seems like the moves, the trends these days develop for a couple of hours at a time instead of a couple of days at a time, which we ideally want to see long term. So there's some things that I'll recommend here over the next few minutes as far as some things that you can do in your trading to get through these swings a little bit better, smoothing out your overall equity curve a little bit more. Some things that I've been doing in my own trading. So let's go ahead and dive in. Let's go ahead and start out by taking a look at some key levels here. We reviewed some of these levels over the weekend, and this is just a basic daily chart of SPY. It's the ETF tracking the S&P 500. And I identified some levels, some key swings that I wanted us to keep an eye on here. And I marked them here with just these yellow horizontal lines. That 190.60 level, 190.75, that was the first area of support that we looked at here towards the end of last week. We originally found support off of that level and bounced higher. Okay, now we all know what's happened here the last couple of sessions. We did see open the week, saw a move to the downside. We broke through that support level, and we actually got down to the next swing, which would happen to be around the 186.75 level. Okay, and I identified that by the low of this candle from back in August. So now we found support right there, and we've bounced higher. We bounced higher today, saw a gap to the upside today. The market was very strong for most of today. We had a brief pullback right around lunchtime into the early afternoon. There was some news that came out, some speakers. Carl Icahn was speaking today. Janet Yellen was speaking today. We saw a brief pullback, but then the market did close up near the highs right at 4 o'clock. So now we know that that's the next area of support that we'll have to track going forward. We know that there's some buyers that have stepped in there right around that 186.75 level. I've been telling my students, I still do not think that we're going to head much higher from these levels until we test the August lows. Okay, I would really be surprised if we did not get down and test those August lows before the end of the year. So what I'm talking about here is right around that 182.50 level. I'd like to see us get back down there. I'm not saying it's going to happen this week or next week, but over the next couple of months, I do think we will get down and test those lows. Okay, the volume continues. I mean, it's elevated compared to what we've seen earlier in the year, but we still have not seen any type of blow-off moves. And what I teach my students is, if we're going to see a bottom put in place, what I want to see is I want to see panic selling. I want to see that session where we close near the lows, we see volatility spike, we see volume spike, very much like what we saw back in August. Okay, very easy to spot where the bottom was there, not only from price, but we can see volume spiked. Okay, if you were tracking the markets back in August, you know that volatility spiked. We saw that panic selling kick in, and that's typically a sign of getting near a near-term low. We haven't seen that since then. So we've seen some pretty big moves back and forth, but until I see that blow-off move to the downside with volume through the roof and with volatility increasing, I don't think the bottom is in yet. Okay, now on the upside, if we do start to rally, we do have some moving averages up above us here. The two green lines there, the dotted lines and the solid lines, we've got the 20 period simple moving average and the 20 period exponential moving average. Those are areas of resistance should we decide to move higher into the end of the week. So we'll see what plays out. We are heading into earnings season here upcoming over the next couple weeks. Everything's going to really start picking up as far as the quarterly releases go. So the catalysts are there for some big moves. We'll just have to be patient, and we're just going to wait and react to what the market's giving us. We'll react to price on the charts. Let's also take a look at QQQ. Out of the three index products that I track, QQQ is probably the most difficult read for me right now. Let's go ahead and pull this up. Okay, so we've found levels. Whenever I talk about these ETFs, I talk about finding support around the 0.50s and the 0.00 levels. Okay, not only do we look at moving averages, but those key numbers there, they oftentimes act as support and resistance, and that's pretty much what we've seen on the way down here. So we did break through the 100 level on QQQ. We did find support right around the 99 level, and we have since bounced higher. Notice on all of these, if we do decide to move higher, the bulls are going to have their work cut out for them. I mean, look at the cluster of moving averages up above us. Okay, there's a lot of overhead resistance there that we're going to have to break up through in order to move back to the upside. What concerns me there, if you're a bull, is that resistance is there, and what we've seen over time is that on the moves to the upside, the volume just drops off a cliff. We're going to need some volume to break up through all that area of resistance up above us. So I personally think that we're going to continue to head to the downside here over the next couple weeks. It may not be the cleanest move. It's not going to be, a straight move to the downside. I think we're going to have to survive some of those short covering rallies like we saw today. But I do think the path of least resistance is to the downside. And again, I would love to see those August lows tested, but that's way down around the 85 level, so that's definitely going to take some time to get all the way down there. Finally on the Dow, and I'll start to speed it up here. On the Dow, we've got some clear areas of support below us. That 160 level is an area just below 160. We've got this 158 area, 157.50, and then we've got those August lows. So we've got some areas of support to look at if we do head to the downside. Much like the NASDAQ, I mean, we've got that whole cluster of moving averages up above us, so there's some pretty key areas of resistance up above us. So would like to see us move back to the downside. I would love to get back down to those August lows. In order for that to happen on all three of these, I definitely want to keep a close eye on volume, and I definitely want to keep a close eye on volatility. Okay, those are really going to be the tells long term to see if we can get some continued selling to materialize for us here. Okay, so all in all for the rest of the week, I mean, today threw a little bit of a curveball. We did see that session where, we did close up near the highs. So, one day does not make a trend change. I mean, we want to see what tomorrow gives us. I mean, the end of the week is going to be key here. Was this just a short covering rally, and are we going to see the bears step in and sell the rally? Let's see what happens tomorrow and into the end of the week. I think we'll have a better sign of what's to come once we come in for our weekend video. So with all that being said, I mean, it's kind of a mixed market. We've seen some big moves back and forth, but you can see clearly from the chart here, I mean, the trends have been for a couple of hours at a time, and we've just seen a lot of back and forth here over the past couple weeks. The good news is, even though we've seen the market as a whole just be stuck in a sideways pattern here, we've actually seen some great moves on some of the individual names that we look at. For those of you that have seen some of my previous videos, you know that I don't look at a huge watch list of names. I don't flip around between different products all the time. I have my small watch list of names, and that list does not change all that often. It creates a comfort level for me and some confidence as a trader, because I know how these names move on a consistent basis. Not just pulling up random names off of a stock scan. I really struggled with that going back a number of years, because I had no idea, levels of volatility, volume, average daily or weekly moves on those names that I was pulling up. By looking at these same list of names, it has really increased my overall confidence and my overall returns as a trader. So when I show you these results over the next few minutes, it's not me just cherry picking the best trades. that we've closed out here this week. These are names that are on my watch list every day, every week. So these are just some of the trades that were closed out. We do have a number of open positions. Again, for me to go through every trade that we've taken on all these names so far this week, you'd probably be here for the next couple of hours, and I won't do that to you. So I'll do a more comprehensive review over the weekend. But let's just take a look at a handful of trades that were closed out. These are a couple of trades. The reason I picked these, we talked about these in some of the previous videos. Going back into last week, we talked about some of these setups that were printing, that were triggering in, and I just wanted to give you an update on how we handled these. The first one that we're going to take a look at is Google. We talked about this one at the end of last week. And going back, we had talked about how frustrating it was because we're so close to getting the follow through to the downside, so close to booking full winners. The last couple weeks, we've had a number of trades hit our first targets and then get taken out at break evens. So it's just this market's kind of playing with us a little bit. It shows us a glimpse of some really nice profits, and then it takes it all back. So the good news here for Google, we took a look at this trade. It triggered in the end of last week, actually on Friday, and we triggered in. You can see my entry point. I'm circling it right here, the series of 2 dots there. We got in at 645.39. The way that I played it, I went ahead and I went out to the October monthly options and I bought a put spread. And to be specific, I bought the 650, 625 put spread. A lot of times on the high price names, a lot of the tech names, for example, I like to trade vertical spreads because it allows me to reduce the cost. These tend to be pretty volatile names and they have pretty expensive options. Okay, so I like to trade those spreads. It allows me to be a little bit more conservative. Okay, so I bought the spread for just over $1,000 per spread. Okay, that gave me control of 100 shares of Google. And fortunately for me, I mean, we held over the weekend. It's always a little nerve-wracking here, especially in this current market where anything can happen over the weekend. It can be nerve-wracking to get triggered into a trade on a Friday afternoon and have to hold over the weekend. But that's exactly what we did. And fortunately for us, we came in early in the week. We came in on Monday and saw the move to the downside, and lo and behold, we hit the full target. So we sold out of the trade. We sold it for $1,400. That gave us a $370 profit, just under a 40% return. Okay, so the way that I've been trading here personally, I've been trying to pick my spots. I've been trying to be a little conservative because of all the uncertainty. I don't think this is the time to jump in with 100% of your normal position size with really aggressive long puts here on the downside. I think you want to be a little cautious here until the market, shows its hand a little bit further, until we get some more long-term trends to develop. So I'm not going to complain with a 40% return, essentially in one trading day. Yes, I did have to hold over the weekend, but really nice trade there on Google. And now we have a long setup. Okay, this is one that I'll be looking at tomorrow. So if this was just day one of a new uptrend, if we're going to rally into the end of the week, we have the ability to look at a long trade here, and I'll be looking to get long at 639.49. I'm going to play it very similar to how I played the move to the downside. I'll probably look to go out into October monthlies and look to buy a call spread. Okay, reduce some risk, be a little conservative, and still give myself the chance for some really nice returns. So nice stretch there. Let me get that data box out of the way. You can see the last series of trades here. We've had 2 full winners. We had this winner on the upside. We had the winner on the downside. We had our break-even trade that we talked about over the weekend. And now we have a new long setting up. So all in all, it's been a great stretch there. A lot of profits to be made. A lot of good swings back and forth. You just have to be quick. Okay, this is not the market where you can come in once a day, check the charts for 5 minutes and then move on and not look the rest of the day. It's just, we'll have stretches throughout the year where that can be done. But now is not one of those times. I mean, there's just a lot of movement back and forth right now, and it takes some attention to detail. Let's move forward. Let's take a look at a quick peek at Amazon here. This was another one that we talked about last week. We had talked about how we avoided the long trade because on that long setup we gapped up past the entry point. And because of our gap rules and the way that we handle the gaps, we don't chase those trades. We don't chase the gaps. We wait for pullbacks. And this one did pull back, but it hit the stop out hit the stop here, and you can see it right here. It hit the stop before we could get in sync with the trade. So we then got triggered into that short trade, and we actually triggered into that trade Monday morning. We actually hit target Monday afternoon. So we do not typically like to take day trades. With the way that we trade with the NetPicks Options Mastery Program, we typically like to be in for anywhere from 24 hours on out to 2 weeks. But when you start to get a market as active as it's been of late over the past month or so, there could be times where if we get these large intraday moves, we do have day trades from time to time. I don't like them. It just takes up way too much of my time to manage those trades. But when they come, we're just going to take what the market gives us. So we played the move to the downside. We bought the 525 500 put spread. Our entry point was right here. You can see those small magenta colored dots there. 521.16 was the entry point. We paid just under $1,000 for the spread. Gave us control of 100 shares of Amazon. We sold it out. We booked a $540 profit, so a 56% return. And again, this was a day trade. We were only in for a couple of hours, so just a really phenomenal trade there on Amazon, and that was one that we talked about over the weekend. So just wanted to show you how we handled that. Nice quick trade there. The last one that we'll take a look at here in this video is on Tesla. And the reason I wanted to cover this one, it's a little bit tricky. And I wanted to show you how we typically manage the trades in the Options Mastery Program. Because it's, as much as we like to be mechanical, our system's giving us that roadmap to follow, there's also the art of trading. That's what we call it. It's that 10% art of trading where you've got to react to current conditions. Okay, so let's walk through this in detail. We had this short trade, and we still had our system giving us our exact entry point, happened to be at 254.83, and we triggered short. This was going back into last week when that setup initially printed. We triggered into it Monday morning. We then chopped around a little bit. Okay, we came in this morning, and we finally saw the move to the downside, and we got to within about 70 cents of a full target. Okay. Now, the pure 100% mechanical trader that says, hey, Mike, let me flip the switch and let the robot trade for me, they would have gotten taken out all the way back here on that trailing stop. Because we're not trading with a robot here, when we get that close to a full target, the way that we teach it, when we get between 95 and 99% of the way to full target, like we were here on Tesla, we start to consider getting out of the trade. We start to work our closing order. Okay, in this case, I bought the October 257.5 put. So once I started to get that close to a second target, I start to work my exit order. Does not mean I mark it out. Okay, it means I work the order. I work the price a little bit to try to get a good fill. Worst case, if we get down there close to second target, worst case is if I can't get out quick enough and it pulls back on me, I want to make sure my stop is really ramped down. I might give it $1 or so to pull back, but I want to take profit out of that trade. Okay, I'm not going to let all that hard work. I mean, we held through some movement back and forth for the first 3 days of this week. Wasn't going to give up all that profit. So not going to tell you that I picked the low here and I got out right at that low to the tick. I let it pull back a little bit here, but I ended up getting taken out. And I got out with a partial profit. So I bought the contract for $1,240. I sold it out for $1,800. That gave me a $560 profit, 45% return. The reason I wanted to show you this trade, number one, to show you how we manage our trades. We allow for that 10% art of trading to make sure we're reacting to current market conditions, and to also show you how powerful the system can be even when we don't hit full targets. Ideally, I would love to hit full targets on every trade. Okay, that's just not realistic. So we got out with a partial profit, 45% return. We were into that trade Monday morning. We were out of it Wednesday morning. So we're talking a couple of trading days. Really great return there on Tesla. Some of the other trades that we have opened, I'll wrap it up with these and let you get on with your evening. TLT, this is the bond ETF. We are in a long trade. You zoom out so it's a little bit easier to see. So you can see here we missed it initially because it gapped up past the entry point. We talked about that in the video over the weekend. We were waiting for a pullback. We did get that pullback. And Monday morning, you can see this candle right here got back to the entry point, and that's when we jumped into the trade. So we talked about this because we do not want to chase gaps. A lot of times when we see a gap up past an entry point, in most cases at some point it's going to pull back to that entry point. It's going to allow us to get in. So we didn't have to chase. We got in. We hit first target. That allows us to move the stop to break even, 122.44. We're still into the trade. Okay, our ultimate target's up at 124.81. So we'd love to get one more push to the upside towards the end of the week. If it doesn't happen, we have moved the stop up. So we've taken a lot of that risk off the table. Good position to be in. So we'll see how that plays out over the next couple of days. Okay, we do have some trades setting up on the financial. This is Goldman Sachs. We aren't in this trade yet. I just wanted to show you that one that is setting up for tomorrow. The entry point is at 177.51. Okay, so if this rally does continue, we do have some names that are throwing some setups our way. Now we're just waiting for price action to confirm and get up towards those entry points. So Goldman Sachs is one of those that we could potentially be looking at, long call spread here over the next couple of days. Let's take a look at EEM. We've got a couple of trades. As much as I would love to show you, all winning trades on our watch list, here's a trade. We're taking heat. Okay, EEM, we have this short position on with some long puts out in October, and we are approaching our stop at 33.1. Okay, so if we hit that level over the next couple days, if the market does bounce, we're going to get taken out. Okay, now I have a few different positions here on EEM. Okay, we've talked about some of these, and I'll review them over the weekend. We have short put spreads on a number of markets. So I had some long puts here trying to play the downside in the near term. I had some longer term positions on by selling some put spreads. So all in all, we may be able to survive this chop here pretty well. We may get taken out of the long puts here, but that short put spread may work out really nicely for us. We'll talk about that more over the weekend. So on our chart here, we are taking some heat on the short trade, but we'll be patient. Anything can happen. We definitely could come back down and hit targets. We've seen that before where we threaten to stop, turn around, and head right back down to target. So we'll see what plays out. And then it's a very similar situation on EWZ. This is the Brazil ETF. And we are in a very similar story here. We're in some long puts based on this short trade here. The system told us to get short right around 20.75. We are taking some heat. Our stop's up at 22.65. If we hit that level, we're going to get taken out. I do have some short put spreads in a longer term position, and those are starting to battle back. So again, much like EEM, we may take some losses in the near term on our long puts, but in our longer term positions with our short put spreads, we're starting to battle back. So we're in a good position here. We're positioned well, and as crazy as that sounds, because we're taking heat on this current trade, we've been able to diversify enough. That's the way that we design our program. We're diversified to where, we're never going to get those wild swings in our equity curve. Okay, we're looking for consistent singles and doubles over time. Couple of other ones, and then we'll wrap it up here. Actually, we'll just take a look at one more, and I'll save the rest here for the weekend update. So this is Chesapeake. We did just get we got taken out here today at break even on that short trade. So again, very mixed bag. And if you follow us on Twitter at NetPicks, so if you haven't followed us yet, make sure you go over there and follow us. We do post updates throughout the day. And over the last couple of days, I've posted that we're so close. We're so close to getting that huge winning streak where we've seen these in the past where across all the names on our watch list, we just hit a lot of full targets. Right now, it's very mixed. We talked about the great winners on Tesla and Google and Amazon, but we have these other trades like Chesapeake, for example, where we haven't quite been able to get enough follow through to full target. We talked about some of them on Apple here over in previous videos. We just haven't quite had the follow through that we've needed to hit the full target. So we're so close to hitting just a great week, but the market just hasn't decided to follow through just yet, and we saw that on our daily charts here to start the video. So I think we're in for a very interesting couple of weeks, especially heading into earnings season. For the rest of the week, I think tomorrow and Friday are going to be very important. Is today day number one of the trend to the upside? I mean, let's see what happens. Again, nice move higher. We did get the VIX to get hit a little bit. We're still at 24.5, so we're still at elevated levels. And you'll see that reflected in our Market Watch tool here as well. What I like to see long term is I want to see a good number of the names on my list that have volatilities near the upper end of their range, their 52-week range. And we're seeing that. You can see here, if I draw a line in the sand right at the 50 level, we're close to 2/3 of our list with volatilities up in the upper end of their range over the past 52 weeks. That's great. When we see that, our playbook really starts to open up. So I'm encouraged by what we're seeing, not only by the profits that we've been booking lately, but I'm encouraged by the outlook heading into the rest of this fall. So I'm going to go ahead and wrap this video up here. I don't want to keep you too long, let you get on with your evening. Again, I'll be back over the weekend, walk through some more trades in detail, let you know how we wrapped up the week. So again, be cautious, be conservative, try to protect that capital until the market really starts to develop into a longer term trend. So happy trading, everybody, and we'll talk to you here over the next couple of days.